Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, October 17th, 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend since the O'Neill methodology follow-through day on the NASDAQ on September 6th, Friday, October 6th. Check the trend gauge over here. Leadership flagged as neutral. A little bit of improvement today. Actually, the last 2 days, decent job with leaders. But today, leaders, yes, but not if you were a leader and considered one of the big seven members. They got hit hard, but the mid and small cap leaders had a decent day for the most part. Let's turn our attention to the five major indexes. We invest across 3 time frames, depending on the health of those indexes, with a focus on the S&P and the Nasdaq 100. Short term, we're at neutral, leaning toward bullish, as we now have multiple closes above for the Dow. Mid caps got their first close above the 21-day today. Small caps rejected into the declining 21. If they get above, that would be a significant change of character. As I said, mid caps with the first close above. S&P 500 got above last week, had one day failing back below, had an undercut and reclaim of the 21 today. We'll talk about that. NASDAQ 100, let's move to 50-day moving average, our intermediate term indicator. We're still on downtrend here, but we have one index trending above NASDAQ 100. At the open again, look like we might be giving that up, but an undercut and reclaim of the 50-day for the NASDAQ 100. Long term continues to be a mixed bag, with the big cap indexes above the 200-day moving average, small and mid cap below the 200-day. So what happened today? Before the open, retail sales came in and they were extremely strong against expectations. When you've got a Fed that's looking for the consumer to slow down, a retail sales double the expected number is not what the Fed's looking for. And the knee-jerk reaction on that was to gap lower, and we did have an ugly gap down. Gap down 0.75% on the S&P at the open, down 1% on the NASDAQ 100 at the open. But a funny thing happened on the way to a massive sell-off. We bottomed within the first 30 minutes, right out of the gate. Strong action by small and mid caps. And at 10 o'clock Eastern, we started a strong multi-hour reversal to the upside. But don't get too excited. Early afternoon, we had a reversal back to the downside, then a choppy base into the close. But net, when you look at the S&P 500, just barely down on the day, when you gap down 0.75% on the perception of bad news, and you've been struggling with supportive moving averages, and you end up closing basically flat, that's a win for the bulls, especially considering mid caps and small caps, which had been serious laggards, outperformed today, and the mid caps reclaimed their 21-day moving average. So although a gap down, strong positive reversal, not positive numbers at the end of the day on the S&P, the Dow, the Big Seven, or Global 60/40, but still a net win for the bulls, as the end result was much better than the beginning of the day. Here are the final numbers. The Big Seven, they led to the downside by Microsoft. This also impacted the gap down open on the NASDAQ 100, as the administration announced further restrictions on selling chips to China, semiconductors to China. NVIDIA hit pretty hard on the day, down 4.7%. That led the Big Seven to the downside, down an average of 0.79% on the day. RG8, on the other hand, up 0.86%. S&P, as we mentioned, just barely negative. NASDAQ down by 1/3%. Dow just barely in the win column. Mid caps up 1.15. Russell 2000 small caps up 1.1%. Global 60/40 stock and bond down 0.26%. Global stocks, mostly emerging markets, down about 1/4%. Global stocks barely down on the day, but bonds took the hit again as interest rates continued to go up, and another day where the market recovered in the face of rising rates. So is the Q4 strength, underlying bid of seasonality, is that rearing its head for the bulls? This is the second straight day where we've had strength in the face of rising yields. We'll have to see. We never predict, but we do note that when what has been a correlation or an inverse correlation starts to flip to the other way. In-house GROTECTION, some of our leaders had nice days. We finished up 0.13% approximately on the day. Let's get into the charts and the tail of the tape. We'll start off with the S&P 500 here. And you can see it's easier if I go to a 15-minute chart. So here's the follow-through day back here on October 6th. 1, 2, 3, 4 up days. Then we start chopping 1, 2, 3. This is our fourth consolidation 3 day. So our day count is up 4 C4, 4 days up, 4 days of a consolidation. And here's your gap down, which you can see, and then the strong rally. But what did we do on the rally? I talked yesterday about this 43.86-ish level that is acting as resistance. We got above it. We can only stay above it for about a half an hour, 45 minutes before fading in the afternoon, chopping, and a decent close. So this 43.86 resistance level is very much intact. We've knocked on it several times now. Usually when you knock on a resistance level, it weakens and you can eventually break through. Sometimes it's so strong that it actually becomes a more of a callus and not a blister that can be broken. And it stays firmly in place. But all we need to do then is look to the downside. Around this 43.20 to 43.24 area is support to the downside. You can see a quick break below there, but a recovery. Another fade back below it. This was on the 13th. This was last Friday. But then firmly back above it over the last 2 days. We played around on the follow-through day with 43.20, gap down below it, but got back above it the day after the follow-through day. So really, we're looking at a range of approximately 43.20 to 43.85-ish now. And coiling, you could argue that 1, 2, 3, 4, 5, that we've got 6 days in this range, which we really do. And the longer you coil, the higher you get, the more power there is when you finally break through a level. That goes for the upside, but unfortunately also for the downside. So right for now, we undercut and reclaimed the ADMA and the 21 EMA. That's a positive. We've got the 50-day moving average coming down 2 to 3 points a day. We didn't quite get there today, but we'll see what happens as things unfold. If you look at a weekly chart here, you've got a very obvious downtrend line if you connect the tops, the declining tops trend line, and bulls, you want to see a clear breakthrough above that in order to get a change in character. Let's go to and some confidence that you've got strength. Back to or up to a weekly chart now of the NASDAQ 100, you can see we've also got a declining tops trend line there, as well as a double bottom formation forming on the weekly chart. Let's go to the daily chart. You can see the undercut and the reclaim of the 21 and the 50-day moving average today. So more good stuff as far as where is support on these indexes. And you can see the range here now is this 364-ish level on the NASDAQ 100. And let's call it 372 to the upside. So 1, 2, 3, 4. You could call it when you make a higher high, it's really 5 days up on the Nasdaq, and then a 3-day consolidation on the Nasdaq. But arguably, we spent a lot of time in that area while we were still headed to the upside. So those are the levels. Two very easy numbers to reference on the Nasdaq 100. Two more on the S&P 500 to determine a breakout or a breakdown. Let's go to the Dow Jones Industrial Average, which got above the 21 and the 200-day moving average on Monday. Second close above both of those now, heading into an encounter with the downtrending 50-day moving average. Let's move on to mid caps. Mid caps, after last week 3 times failing to get above the declining 21, got above it today. That moving average now flattening out, which is good. We want to see that turn and work its way higher. And we'll see what happens when mid caps encounter the downtrending 50-day moving average and 200-day moving average. You can see how that area acted as support while the mid caps were pulling back before finally giving way on the gap down back in mid-September. On to small caps, still not quite ready for prime time. Uh, Nice day today on the back of banks and oils, but again, not quite ready to get through this declining 21-day moving average. Now, this is going all the way back to the beginning of September that it's been below there. Two encounters with it last week that failed, another one today that failed, but still closing in the top of the range. We've got our alert set here, make sure that we know should we get back above it, but a move above it and a turn of the slope of the line of the moving average, and it won't take long for that to happen, is what the bulls are looking for. Let's go to the VIX. VIX up on the day, 3.9%. It was up most of the day. Um, so right now the 21 is acting like support for the VIX. That's not what the bulls want to see. We want to see a clear break below today's lows. That should correspond with a break above that range that we referenced in the S&P 500 and the Nasdaq 100. Let's go to the dollar. A little bit of everything in the dollar today. Gapped up, pulled back while the market was headed higher. Then it bounced while the market was selling off in the afternoon, and then faded while we chopped into the close today. Net net on the dollar on the daily chart, we're hanging around this 8-day moving average. You can see a handle and a big cup and handle starting to form on the dollar. That's not, the bulls clearly don't want to break out above this 30.07 pivot point. We want to see a break below the 21 EMA on the dollar. Let's flip to precious metals. How's the correlation today? Well, gold just barely up. Gold fighting with this 200-day moving average here. If we get back above there, that would be a change in character. Also, we've already had a shorter term and intermediate term change in character with the moves above the 21 and the 50-day moving average on gold. How about GDX? Not quite up to the 200-day moving average, but very nice move off the lows here and relative strength versus the S&P. We're keeping an eye on this. Haven't bought any of them yet, but certainly watching it, as it also can serve as a fear trade with everything going on in the Middle East, Ukraine, recession, the Fed, the budget deficit. A lot of bad news. Market climbs a wall of worry, and there's a lot to worry about. Here's silver, also up on the day, failed at the declining 50-day moving average. Let's flip to bonds now. I mentioned bonds up in the face of stocks. So here you see, or sorry, stocks up in the face of rising interest rates. What you see here is the BND, the broad bond index, testing the lower edge of its price range. That means that you're going to see bond yields testing the upper end of their price range. Let's look at TLT first. Also testing the bottom of the price range. TLT, this is the long bond. Here's the yield that corresponds to that. TYX, the 30-year, up near the top of the price range after bouncing off the 21-day moving average last week. The 10-year bond TNX closed with a higher high after what looked like to be some exhaustion last week. All it did was come down, retest that moving average, bounce off of it, and they've also got a chart for a 5-year bond on Market Smith here, and that too is making higher highs on prices. Let's go to Bitcoin. That's been in the news with the approval of a spot Bitcoin ETF. Failed at the 200-day moving average on some short covering, tight range inside day today, but all in all, positive action as long as it holds above that 14 level. Do want to note RSP, the equal weight S&P 500, was up 0.5% today, above its 21-day moving average after languishing below it. So this chart looks a lot like mid caps, and that's really what they act like, the equal weight S&P 500, because there's so much focus on those big seven Once you get those out of the way and count them as just another name in here, this looks a lot like the mid cap index. So definitely a step in the right direction with the broad RSP getting back above the 21-day moving average. Let's go to the tail of the tape now. You can pause this. I'll hit the highlights. Uh, NASI RSI oversold with a hookup yesterday. So we're out of oversold with the hookup. So good stuff there. So we've got stochastics in our favor across the board there. I mentioned retail sales. I mentioned the U.S. Restricting the chips to China. Our day count up 4 C4 on the S&P. Eighth close above the 80 EMA. 5 out of 6 above the 21 EMA. Expectations positive as long as we maintain price above the 21-day moving average on the S&P 500 and the NASDAQ. Here are the sectors that were positive on the downside: XLK, XLRE, and SOX. Really, this was NVIDIA that dragged down the SOX and the XLK. Real estate was strong early. In fact, we sold half of our DRV. I'll talk about the portfolio, just segue into that now. Sold half of DRV. Let's look at XLRE. So I mentioned last week our stop would be a move above the high when it failed at the 21 EMA. Well, it was strong early in the day. You see that breakout, but that breakout failed. If I'd have given it a little more patience into the end of the day, but I didn't. But we've still got half of the position, and it's holding the 80 MA. We could hold that back, buy that back on a break below the 80 MA on XLRE. I'm talking about the DRV, but it is 3 times the inverse of XLRE. So we go by the chart of the underlying, not of the derivative. So we sold some of that, and then we added to DFEN. As this is 3 times the ITA and made higher highs since the move, since the gap up on the Hamas-Israel uh, mess that's going on over there. So pulled back off the highs of the day as it ran into the declining 50-day moving average, but so several of those stocks setting up and improving their overall bases. And then UPRO, when we undercut and reclaim the 21-day EMA, we added some to that, net increasing our beta mildly. Actually, it's 1.12. So from 1.02 to 1.12 with the UPRO add to add to DFEN and the trim of DRV. So bottom line on the day, gap down on retail sales on strong retail sales. So in this case, good news was bad news, but a strong reversal, afternoon fade, small and mid caps outperformed on the day. Net, it's a win for the bulls today. Anytime you gap down 0.75 to 1% and go to flat or just barely down, as is the case on the NASDAQ and the S&P 500, that's a win for bulls. We'll take a look at a few charts that stood out today, particularly our portfolio holdings. And let's look at NRGU here, as this continues to be a pretty good trade since we entered it on, again, the Israel conflict on that gap up day, just making higher highs above the 500 level now. On the TBT, rising interest rates, we're holding this. We're profitable on that. Also, Palantir, PLTR, up 2.8% on the day. This is really setting up very nicely. This pullback, it just tested the top of this little shelf, pulled back, tested it twice now, showed some really real strength today, despite an overall meh action for S&P 500 and the NASDAQ. But this is a $38 billion company. This isn't one of those big caps. So several of our really no issues with any of our holdings today. VRT undercut and reclaim the 21 EMA. Our cybersecurity holdings continue to consolidate nicely at the top end of their range. That's Zscaler and CrowdStrike. And NVO, we bought that yesterday. That's hanging right above the 100 level, tightening up after a big move up on some news. And let's see, Nutanix. This is our biggest individual position, bounced at the 80 MA today. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. And remember, it's not how much you've made in the markets, it's how much of that you can keep. And with that, I will wrap up the video for Tuesday, October 17th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.